Hello and welcome to another episode of Econ with Phantom. This week we have a special guest with us. I was volunteering at this conference, the AfricaFintech Summit, and I took interest. I wanted to find out more about it, and who better to answer a few questions of mine than the lead organizer of the event, Mr. Andrew Barden. Welcome, sir.
Hello, thank you so much for having me. It's a pleasure to be on your esteemed podcast today.
Oh, thank you so much for accepting my request to be interviewed. So, like I said, recently I volunteered at the Africa FinTech Summit, and the first thing that I noticed was the plethora of officials that were present. One of the most prominent of which was Dr. Denny Kalialia, who gave a profound, interest-arousing speech inviting people to invest in Zambia, while at the same time setting boundaries for engagement. Do you believe that the growth of the fintech sector in Africa is so resounding that the big players in the traditional financial sector don't have a choice but to align themselves, or be outdated, or perhaps they still have a slew of options to explore?
Yes, I agree with you. The traditional players in Africa's fintech space need to accept financial technology. This was a conversation that was it was a big piece in our industry probably, 5, 6 years ago. Nowadays, we're starting to see the traditional players, such as banks, financial service institutions, microfinance institutions as well, starting to embrace financial technology. I believe that it plays an extremely crucial role in driving certain aspects of development. What I mean by this is specifically two things. Specifically, first of all, and primarily, what I would say as sustainable economic development. And the second would be financial inclusion. You cannot have one without the other. In terms of financial inclusion, you have to make sure that this is beneficial to the people you are, as per se, financially including. You have to make sure that the people who are using your product are getting a benefit out of using it. If they do not get a benefit, they are not going to continue to use it. And then in terms of sustainable economic development, more efficient business, more efficient transactions, all of that plays a role in building a more efficient economic system. And so I think these play a big role in Dr. Denny, Honorable Felix Mutati, and others, at the recent Africa FinTech Summit in Lusaka, really kind of spoke about this and really brought it to light, specifically in the Zambian ecosystem.
Yeah. And I was going to touch on when Dr. Felix Mutati mentioned how it's important for these big upcoming players in the fintech sector, how important it is for them to integrate in the societies that they wish to grow in. And on a similar wavelength, the follow-up question to this would be, like, how important is the adoption of these technologies to societies like ones in Zambia or, for example, Kenya, where you are? Because sometimes, the adoption cannot be so streamlined. It can be difficult at times because of the reluctance of people to adapt to change. So how do you navigate that and ensure that people can embrace the change just to come and show them that there's benefit? Because people can be stuck in these old belief systems where they
Yeah.
think that changing things might cause problems because they feel so comfortable in the state that they are. So how do you navigate that?
So you can answer this question from a variety of different perspectives.
Mm.
let's start by approaching this question from the perspective of a bank or being a corporate kind of fintech. You have to approach it in the point of building trust and building, the relationship with your viewers. Now, earlier in your question, you had mentioned Kenya specifically. I am based here in Nairobi, Kenya. I join you from Nairobi, Kenya, virtually today.
Yeah.
It's been a bit of a rainy day, but you know how it is.
Mm.
But the example of Kenya, it's really hard to compare. And what I mean by that is the likes of M-Pesa, the world's first mobile money system, was in fact invented in Kenya. It was invented by Safaricom. And so in 2007, they rolled out M-Pesa. They rolled it out before the iPhone, before, smartphones really became a thing.
Wow.
And it was, simply a USSD kind of SMS payments system. Now, M-Pesa has had over 10 years, 15 years, in fact, 15, 16 years to build the trust of consumers. Building trust, it takes a long time to build trust, but it takes a very short time to destroy trust.
That's true.
Yeah, it's very true. And so I think that is the point where many fintechs lie currently, is have we been around long enough to build the trust of our customers? And I understand this as, say you are making maybe, and I'll put this in the US dollar equivalent, just to make it a little easier. But say you make $3 a day, okay? You make $3 a day. I think that comes out to, maybe 70 kwacha or so. Where does the risk lie? If you make 70 kwacha a day, but putting your money into a digital system where you're risking, on average, maybe 5, 6 kwacha,
Mm.
and also, I guess, taking into account fees, that's a really hard sell. You know what I mean? How do you
Yeah, it is.
convince someone to potentially waste 5 or 6 kwacha a day on a system? So, at the core of it, it involves building trust. And I've worked with many fintech startups across the continent, and many of them take different approaches. In Kenya, for example, you do not have to build the same trust that you have to do, say, in Nigeria or Ghana or Congo. Because in Kenya, we've had these systems for many years. But if
Wow.
they're very new to people, you have to explain it to them. And then it goes a step beyond that as well. What is the role of the regulator? And what I mean by that, in the Zambia context, would be the Bank of Zambia. What is the role of the Bank of Zambia in protecting the money or the assets of the Zambian who is putting their money into these technological systems? So the Bank of Zambia, of course, has a very kind of stern position on this. They are very structured, more so than regulators in, say, DRC or Mali, and such. But, making sure that your end user is protected. If their money, is defrauded or stolen, what is their recourse? How do they work to get that back? Additionally, how do they know that the company they're working with is approved, essentially, and that is the prelude to the licensing process. Is the company that I'm working with licensed? You know, that's
And
a
I feel
big
that goes down to the, I'm sorry to cut you short, but I feel it goes down to the aspect of building security in these structured systems. So you find the businesses that start up, they cannot just begin because they need to be vetted. They need to go through a structured process so that trust can inherently be given to them because they are backed by some form of entity. And
exact.
I get that. At the summit, I heard Dr. Mutati mention how these new startups will have to pour in money and be more interested and invested in ensuring that there's a wider understanding of what they have to offer on the market amongst the people. And
Yes.
you're aware that there's around 2 billion people on the African continent, and a significant portion of these people lack access to internet. So
Yes.
critics might argue, in the quest for pushing for advancement, in the quest for pushing towards licenses, for example, you might forget that you first have to begin at the grassroots level to help the individual understand what you're offering. So then
Yes.
this presents a problem for a very small startup because you find that they have to navigate between using the resources that they have to applying for the licenses and at the same time using the resources that they have to educate their consumer base. So in what way, if possible, can a small startup ensure that they're not constrained on one area, they have somewhat of a balance, if you understand what I'm talking about?
Yeah, that's a bit of a tough question because it really depends upon the company and the type of founders you have on your team. You know, in regards to building public trust and almost educating your consumers, that is extremely time consuming. You know, if
Mm,
every week you, I guess let's take a step back. Say you run
okay.
a startup based in
Mm,
Lusaka and you have 6 employees, including yourself. Okay. If you're
mm,
doing business in the copper belt, you have to travel there. Say the way that you decide to engage your customers is by hosting local kind of seminars or educational sessions with your potential consumers. You have to travel out to the copper belts. You have to organize this little event. You have to get people, you have to make sure people are there. you know you have to make sure that they get value out of attending the event and so forth. So there's a lot of different ways that startups can engage, and many startups kind of revolve around this. I would call it grassroots,
mm,
focusing on going directly to the consumer and educating them. I know on one of my recent trips to Lusaka, I think this was August or early September this year. I
mm,
was at Levi Mall going by ShopRite to pick up some stuff.
mm,
Uh, and I noticed there is a booth for a company called Yellow Card. Now, Yellow Card
yeah.
does cryptocurrency. You can purchase cryptocurrency, you can sell cryptocurrency, and then you can also use it as a means of payment. And it's run by a friend of mine named Chris Maurice. He's also an American, like myself. But
Yeah.
they took that grassroots thing. They were sitting
Mm,
there in the mall talking with people, educating them. But if you're looking for an answer from me, that's what is the best way to educate and engage with consumers, there really is not a single way to do that. I believe wholeheartedly that trust takes a very long time to build. And there are a lot of different ways you can build it, but in terms of how you engage with your potential customer is everything. If you're meeting them in their hometown, helping explain to them you have a person that they can always go to help get answers. Of course, that company is going to build more trust than, say, a company that never engages with its people outside of Lusaka. You know what I mean?
And I completely understand. And to sort of take you back to Yellow Card, at my university, the University of Zambia, you notice a lot of these, well, the most prominent of which, Yellow Card, engaging with students, educating them, running them through these processes so that they can understand how to trade and how to educate their peers. And I completely understand it begins from the grassroots level, but then at the same time, there is no right formula. You can still get it wrong, but you just have to go for it.
And
Yeah.
it's very different depending on which country you're in. I
Yeah.
keep using Kenya for this example. I would argue the Kenyan populace, the average Kenyan is much easier to convince to use financial technology systems because they are used to it, or this has been a part of their life. I mean, M-Pesa here in Kenya, you have probably 98, 97% of the population has access to M-Pesa. That is absolutely massive. There's not a single country in the world where mobile money penetration is that high. And so, given that people are used to that, it's a lot easier to convince them. The same is true in the United States. The country I'm from, my family for many years, probably at least 15 years, 10 years, they have had an app. They have had a mobile app for their bank on their phone. And so there are individuals who go about life never having gone to their physical bank for years. They trust the system more so than, someone who is used to going to an agent or a branch regularly. So, at the end of the day, I feel like I'm repeating myself, but at the end of the day, it always comes back down to trust. If you come with the mentality of, I don't care about regulation, I'm going to do what I want to do, you're not going to go anywhere. The government is going to come for you.
Yeah, and Dr. Kalyalo made that very clear in his speech. He was very subtle about it, but I feel everyone got the memo.
Yes, exactly. It's one of those kind of things where, and I guess this goes kind of into my personal belief a little bit, but in the financial technology sector, you absolutely need regulation. I think if you asked me 10 years ago, do governments and central banks need to regulate things, I would be on the free market side of things. I would be like, let the let the people, let the businesses do what they want, they'll figure it out. But having several years of experience and working in this sector, I understand more so than I used to the importance of regulation, because some of these companies, and I'm not saying all of them, it's probably less than 5%, less than 5% of fintechs in Africa. If there was no regulation, they would absolutely just destroy their consumer for personal gain, um,
Yeah.
which is not a good or positive or enlightening thing to say, but that's reality. And so
Mm,
there's a very important aspect of regulation that comes about when it comes to this. And I think the Bank of Zambia is being a leader on the continent in this regard. I would also specifically advocate the Central Bank of Egypt as well. They have done a lot to be proactive in working with entrepreneurs who come to them and say, hey, I have a product, I have a service that
mm-hmm.
doesn't fall under any of your current regulation. What can we do
Mm,
together? And you know what the Central Bank of Zambia and the Central Bank of Egypt have done?
mm,
They have established what's called regulatory sandboxes. And regulatory sandboxes are designed for companies, products, and services that do not fall behind current regulation. And so, in some countries, this may be crypto. In other countries, this could be a Rosca saving model, um, and such, where there is no current regulation for what you're doing, but the central bank allows you to test it in a controlled environment. And, as an entrepreneur, you learn from that experience, and the regulator learns from that experience. The regulator learns, hey, maybe we need to enact some regulations along this side of things to make sure that these companies don't get too crazy, you know, and
yeah,
such.
because companies
So
can get crazy. Yeah.
yeah, and when there's a lot of money involved, things can
Mm,
get really crazy. Uh,
yeah. So I want to take you back to now the Africa FinTech Summit, the summit as a whole. So over the past number of years, the summit has made a number of headlines. From holding extraordinary conferences, spawning these amazing companies. I mean, I saw the likes of Yellow Card and a number of other companies that stemmed from you guys' cooperation. And my question is, how do you, as a summit, and obviously as a lead organizer, how do you identify a suitable partner in this sector? Because as fast as it's growing, Africa FinTech on the continent is the fastest growing sector
yes.
anywhere in the world. And that calls for celebration, but then at the same time, it calls for caution because there might rise up people who are, you know, criminals, people who want to deceive. So, as a summit, how do you identify a suitable partner to work with?
Yeah, that's a really good question. Um, for what we do from just the summit perspective,
Mm,
that a lot comes down to kind of more of a financial commitment on the partner. But in terms of what we do in regards to regulatory affairs, um, strategic introductions and such, those are
mm,
much more specifically decided partners. We want to
okay.
make sure that we're not working with someone who is engaging in, for example, terrorist finance. That would be horrible. I would not be able to sleep if we did that. I would feel
Mm,
extremely bad
mm,
in that regard. So
yeah,
for our internal process, yes, we definitely, do a little bit of due diligence on these
mm,
partners and so forth. But you know, one of the programs we enacted in the first year we were operating is called the Alpha Expo. And you were at the summit. I'm sure you saw some of our Alpha Expo participants there. This program has been, you know, since day one, designed to give value to early stage startups who, per se, could not afford to participate in events such as the Africa FinTech Summit. I mean, you know, in regards to an exhibition booth, you know, not just at our event, but at many of the people who attempt to do events like ours. I say attempt because, you know, I like to be
No,
funny.
you guys are no, you guys are the veterans of the game. You've been doing
But
this for 10 years now, am I right?
it's been a while. But
Yeah.
you know, we want to make sure that, you know, these companies that may not be able to afford to participate in events are able to. And so for
Yeah.
our Alpha Expo this year, we took on board 15. We took on 15 startups, 7 of which were from Zambia, 8 were from
Wow.
outside of Zambia, um, in other African countries. We took them on board into our cohort, and you know, we gave them free exhibition, the opportunity to pitch on stage. You get to attend the summit, the VIP dinner, all of these
Mm,
different things, you know, and it's kind of one of those things that's like, hey, we'll help you as much as possible, but we're not
yeah.
holding your hand. You know, you also have to take initiative. I'm not going to introduce you to every single person you need, you know, but this is the room
Please
you
don't stop
need to
for my
be in.
boys. Mm,
Exactly. You know, this is the room you need to be in. Take advantage of it. So that's one of the many different things we've been doing over the years. But I think that answers your question. Correct me if I'm wrong,
no,
though.
it does. It does. And it leads up to something that I also wanted to ask. So at the conference when I was doing my articles, I noticed a number of companies, they had booths, they were advertising, and
Yes.
there were companies from like the likes of Chipper, which seeks to give customers access to stocks, to Maitalu, which seeks to revolutionize how money is moved and how people think about money across the board. And what value can be derived from embracing this? And I understand that you've already touched on this earlier, but I want you to hit it from the aspect of the Africa FinTech Summit and what it aims to do on the African continent. So, do you think that um, the potential of this sector amongst individuals in Africa, like every ordinary Jim and Jack in Africa, do you think they underestimate the potential of this sector? And if they do, how can we begin to change mindsets and show people that if you do not align, you will remain in the past, and that will be very sad.
Yeah, I mean, you can take this from either the corporate or the consumer point of view. I think it's better to
Mm,
answer from the corporate side of things because we've
okay.
discussed, you know, the trust building of the consumer side
Yeah.
extensively already. But I think personally, financial technology will play a huge role. And that's one of the reasons why in Zambia, our theme was fintech in every industry. Financial
Yes.
technology is what I would consider a almost an infrastructure rail. Okay. And what I mean by this is as simple as things as roads, telecommunications, access to internet, access to
Mm,
the financial system. That's what fintech plays, a role in access to an exponential financial system. And so,
mm,
you know, in terms of building fintech and building financial technology rails, you can bring more individuals and more partners on board. But in terms of getting more people involved, I'm gonna be honest, I've played the role of salesman as well for fintech companies, and it's not a fun job. It's very challenging. If you have someone who for their entire life they have saved money under their mattress, convincing them that this digital bank, even something like ABSA, a very prominent bank, using that digital system with ABSA, that's quite challenging. It's very challenging because overcoming the concept of physical money, in the fintech industry, you cannot physically with your hands feel your money. But if you have cash, you can sit there and you can feel your money. So I think that's a very strategic thing that a lot of companies such as Chipper, Maitalu, and others are working to solve. I said it takes many years to build trust with the consumer base, and that's where we are right now. Right now in Africa's fintech industry, we're in a trust building phase.
And I guess this is the best phase to begin the conversations, to begin having these somewhat intrusive conversations with our elders, telling them that after all, their money is not safe under their mattresses.
Yes, yes.
Considering the past 10 years that the summit has existed, you guys have done commendable and tremendous work in the fintech sector, and it's highly impressive. So, what do you have in store for the African continent? Where do you see the fintech sector in, or should I say, in and around all African countries like Kenya, Zambia, in the next decade? And how do you see yourselves positioned in the next 10 years? Do you see yourselves as a major player in the fintech sector, or will you take sort of a back seat, if you like?
Well, I've never been one to take a back seat in anything personally, but the fintech sector on the continent, there's this concept of what is called leapfrogging. And leapfrogging is the process of a single economy or multiple economies jumping steps in the innovation process. Okay? So say instead of, going from written letters to telegraph to physical phone to, a more digitized phone, you can go from writing letters to a digital phone. That's kind of what the concept of leapfrogging means. And we as the Africa FinTech Summit believe that financial technology gives many Africans the opportunity to leapfrog those, I guess you could call, intermittent innovations. And, financial technology can do a lot in a lot of different industries. Something that I have been extremely interested in this year has been the plight of artisanal miners in Katanga and the Kivu region of the DRC. These individuals are physically digging for cobalt and such that go into my iPhone, that go into everyone's iPads, their laptops and so forth. I've been extremely interested in this specific use case, and I have been doing a lot of research and thinking around what can financial technology do to improve the lives of artisanal miners. And this is not just including the mining industry. This includes the transportation and shipping industry. This includes, everything from MSME, agricultural industry, and so forth. But how can financial technology bring enhanced efficiency to these, what you could call fairly traditional sectors? And I think we're beginning to see this in some countries, in Zambia, in recent history, the organization that runs the toll booths in Zambia has recently introduced kind of electronic toll payments. Something as simple as, hey, you don't have to stop to pay a toll, as opposed to 10 years ago when going through a toll and customs booth was going to take 10 hours. I mean, it simply comes down to efficiency. And that's one of the beautiful things, and that's why I love the field of economic theory and economic thinking, is that much of it revolves around this concept of efficiency. What is the value of someone's time? What is the value of their input to the economic system and so forth? And so I think financial technology plays an infrastructural role in global industry. And I think fintech in particular, in Africa specifically, gives the option to leapfrog other intermediate innovations. And that could mean in the next 15 years, doing business in Africa becomes more efficient than doing business in Canada, the US, Europe, China, and so forth. And I think this will become, extremely special. But, I'm not really in a position to talk for the entire sector. But my personal belief is that financial technology is an infrastructural rail that plays a role in every single industry.
So I can't help but feel, after all we've talked about, there might be someone out there who might feel threatened by who might feel threatened by advancements. Think about it this way. The new modes of payment for road tax, I mean, toll fees, use an electronic card. What does that do? It removes the
The
person that works at the
opportunity
booth.
for corruption.
Yes, it does remove the opportunity for corruption, but in the quest for more efficiency, in the quest for more advancements, how do we ensure that the people who are already in those roles don't become obsolete and don't become rendered useless and delinquent because they can't because there's no room for them basically. So in the quest for efficiency, how do you balance that?
Yes. This is a tough question. And I would use the example of Twiga Foods in Kenya. So there was a company a few years ago that came about called Twiga Food. And they work with smallholder farmers and vendors directly for fruits and veg in Kenya. And one of the things that they didn't realize when they first started doing work was that they put a ton of middlemen out of business immediately. You know, old school kind of middlemen. Hey, I'll come with my truck to your farm. I'll pick up your stuff. I'll take it to a market. You know, I'll give you money. I think, and I do honestly believe financial technology does threaten a bit of that, what you could call middleman industries. The way to solve this, I am not a great person to ask about how do you solve that. Because, you know, personally, and I'm not talking from the FinTech Summit perspective, but me personally, you know, it comes down to even you as a person has to innovate your processes. You have to change what you do. Take, for example, there was an issue in the early 1900s in New York City specifically, and this happened in London as well, where they were concerned by the amount of horse manure on the roads. They said, we do not have enough people to shovel horse manure off the road. Well, give it 10, 15 years from when people were asking those questions, there was no longer anyone shoveling horse manure off the roads because it was all cars at that point.
Yeah.
So it's also a question of, I don't personally believe it's the fintech industry's responsibility to make sure that all of those middlemen have continuing positions. And I know of people who would argue with me for hours on this topic. But, you know, me personally, and I come largely from a more free market Austrian field of economics, where, you know, it's the much more thinking is you know, innovate or die, essentially. Or, you know, that's kind of a harsh way to put it, but, you know, eventually at some point you have to change what you do in order to survive and continue doing what you do. So I think it's a fine line. I think there is a fine line of companies working with individuals who may be threatened by what these companies do. Hey, how can we use your expertise, or how can we make you an employee? How can we work together to further a cause, as opposed to, you know, fighting each other essentially? And that's, you know, I mentioned earlier, Twiga Foods in Kenya, they came into an issue when they first came into the market, where these middlemen were like stealing their shipments, you know, and taking their vehicles and such. And I understand that point. You know, if you threaten someone's lifestyle, someone's livelihood, I almost feel that they have a right to fight for what is theirs.
Really?
But, you know, how do these two parties come together and work together for the cause, for a cause together? And I think that's the hard part. You know, in this world is so decisive, man. I told you earlier, I'm an American. I'm an expert at decisive, you know, two party systems, and you know,
yeah,
half of America hates the other half of America. It's ridiculous.
yeah. It's yeah,
Um,
absolutely.
but how do we bring people together to solve a common issue? And the hard part with fintech is it comes down to the issue is not necessarily the same. What
Mm,
the company is solving oftentimes is much bigger than what the individual or the middleman is trying to solve. You know, the middleman's just trying to feed his family and make sure that, you know, say he works in agency banking. So he's the bank agent for his village for uh Xanaco,
mm.
you know. But if Xanaco introduces a system that puts him out of business, he doesn't want to, you know, do that, because then he's going to have to find something else or innovate, change, and so forth. I don't know.
But
It's
then again,
quite a
when you look at
complicated situation, man. It's a
yeah,
complicated situation.
true, true. I'll admit it is a complicated situation, but when you look at it from a Darwinian perspective, when you look at the theory of natural selection, it's evolved or become obsolete. So it's it's part and parcel of each and every individual to embrace change and to adapt so you can survive, because we're currently in a stage where we've just advanced from rocks and using sticks to make fire into a place where we use gas, we use vehicles to move around, and we use steel for our axes. So we've just moved up a notch, but the instinctive nature of man to adapt to change is still part of us. What's just happened is that people are unwilling to embrace change because of their uncomfortability to move forward. They are so comfortable in their states. But then again, this comfortability of individuals, it might be the death of some, unfortunately.
Yes. I agree with you. You know, I've been fortunate in my position to meet some absolutely amazing innovators, you know, some people who, you know, can call themselves billionaires and so forth, like US dollar billionaires, not kwacha
Wow.
billionaires.
Oh, that's trillions in kwacha.
Yeah, but
That's trillions. Mm,
you know, one of the things that I've noticed about some of these people is
yeah.
that they don't really care. You know, if something threatens their position, they're just like,
Mm,
well, then I guess I need to think of something new, or I guess I need
wow.
to change my approach. You know, they're very, what I could call flexible human beings. And I think that's on our generation. And we're
Mm,
both in the same generation. You know, it is on our generation in a space where technology is changing extremely fast. I mean, you know, I'm sitting here tonight with an iPhone 15. You know, it's very
mm,
nice. I like it a lot. But
oh,
you know, imagine 15 years ago. 15 years ago, what do you have? You have the first generation iPhone, you know, and such. One of the things they say commonly is the current the current smartphone in the world has more technology in it than the Apollo missions had when the United States originally went to the moon.
wow. That's
That's
profound.
crazy, you know,
Yeah.
and so it is on our generation to be flexible, and it
Mm,
is on our generation to be the ones who say, I don't think that is going to continue forever. And I mean,
yeah.
you know, I haven't been in the industry, you know, I haven't been in the industry 20, 30 years. I'm not that
Mm,
old. But You know, even in the short time I've been in the industry, things have changed quite quickly. You know, just a few years ago, when we talked about fintech, we were simply talking about payments, digital banking, and remittances. You know what we're talking about nowadays? We're talking about insurance technology. We're talking about investment technology. We're talking about blockchain. All of these things that didn't exist a few years ago. So when it comes down to it, the strongest people in life and in anything will be those who are flexible.
Yeah, that's true. And we're headed towards end, unfortunately. It's been a really interesting interview. I've learned a number of things myself. But I wanted you to give like closing remarks. So like picture you are speaking to the West. You're speaking to countries in Asia, uh, and towards New Zealand and Australia. And I don't know, but I have a nagging feeling they are oblivious to what's going on the African continent. Some of them, at least. So,
Yeah.
what would you tell them if you had the opportunity? What would you tell them about how the fintech sector in Africa rather is coming up, and well, if they should be prepared?
I mean, you know, from the United States. I guess you could call me a Westerner.
Ah,
But my message to the West would remain the same. You know, it is simply take Africa seriously.
mm,
Stop stop looking at Africa as this poor continent. Stop looking at Africa as needing aid, you
mm,
know, for everything. Africa doesn't necessarily need aid. Africa needs business. And that's
yeah,
the point that I see, you know, whereas it's like, let's emphasize the point of business and less of aid. Um,
mm,
you know, we need to be working together. And I honestly believe, you know, Africa, give it 50 years, it's going to be the most populous continent in the world, man.
yeah.
I mean, you know, the way some cultures give birth, it's very quick. You know, us Americans, we have one, two children and we're done, you know. But
Ah,
you look at, you know, some cultures like Ethiopia,
ah,
it's like 8 children's not enough for them. So,
they went and multiplied.
you know, so
Uh,
it really comes down to a thing of one, Africa is the richest continent. And
yeah.
the West unfortunately realized this when
Mm,
Belgium was in charge of the Congo. They did realize this. Um,
yeah, yeah.
you know, and they still capitalize upon that. And so if I had to give a single message to the West, to my home
Mm,
country, even the United States, I would say
mm,
take Africa seriously.
mm,
They Africa should be business partners, not,
mm,
you know, just another
mm,
country you're trying to
yeah,
not just another continent you're trying to overtake. It should not be like that, you
yeah,
know.
yeah.
But I think we're at a turning point. I think
Mm,
in recent years we have hit a turning point, and I believe countries are beginning to realize this. And I believe
yeah.
specifically the likes of China, Japan, and others have realized this even before the United States, the UK, Germany, Belgium, and so
Mm,
forth. You know, they've come to realize, Africa should be a trade partner. It should
yeah.
not just be, you know, in the way of shipping routes.
Mm,
That's not a good way to put it, but in reality, that's how some of these people look at it.
yeah,
So,
yeah.
unfortunately, that's the position we find ourselves in. But you know, I
Mm,
I dedicate my life to, you know, advocating for the African continent, and so forth. And that's where I continue to find myself today.
Wow. Well, thank you so much for joining me on this episode. It's been a pleasure having you here, man. I
Yeah,
hope
thank
to
you
have
so
you
much
sometime.
for having me, man. This is a good time. You know, I could go on for another 4 hours, but I think
Yeah,
your
we
listeners would be
probably would.
bored.
Yeah. Yes, they would. Thank you so much, man. Take care.
All right, cheers.